Everyone, this is Matt Bivens, CEO of Canopy. Welcome to another episode of our Fireside Chat series with leaders in business finance. Today, I'm here with my friend Lizzy Handsman, the VP of Operations at Prime, who formerly spent 7 years at Square, focused on small business funding. She's also a perfect person to talk about the innovation taking place in embedded credit. Lizzy, it's great to have you on. Tell us a little bit about yourself, your journey, what got you into small business lending, why startups versus enterprise, and why Prime?
Yeah. Well, thanks for having me, Matt. I'm really glad to be here. As you mentioned, I recently joined Prime as the VP of Operations. We're focused on building vertically integrated full stack infrastructure that enables merchant-facing platforms to create lending programs for their SMB customers. Prior to Prime, yes, I was at Square for nearly 7 years, where I most recently led the global operations team for Square Banking. We were focused on providing banking services, including lending of all different types, to small businesses who use Square for transaction processing. As far as what got me down the amazing SMB path, my journey really started when I was a young kid. My dad, who's an entrepreneur, started a fabric distribution company in our dining room, which he still owns and operates today. My mom, on the other hand, she wore many hats in SMB banking, one of which was a small business relationship manager. Between them, our dinner table conversations married their two careers. I truly thought, until probably recently, that collateral and cost of goods sold were common household terms. Once I found out they weren't, I was certain when I grew up, I wanted nothing to do with lending or small businesses. Irony is, I gravitated right towards a career that straddles the topics of the conversations that I was raised on. And my drive is centered really in democratizing financial services, streamlined decision-making, and ultimately building solutions to give time back to SMB owners just like my dad.
That's amazing. So this is a family affair to have everybody in it together. That sounds like amazing dinner table conversations. I know maybe not everyone's favorite topic, but something that I could talk all day about, which is obviously why we're here. And so as you were thinking about moving on from Square, what was some of the attributes that attracted you to Prime?
Yeah, Prime is focused on embedded lending, and we are just really getting started on building out a full stack infrastructure that we can put lending programs on other platforms. What got me excited about this program specifically and connecting with Kieran, our CEO, was that at Square, I was focused specifically on serving Square customers. At Prime now, we have the ability to work with any partner out there to help serve all of the SMBs in the United States. One thing specifically about startups that's quite different than enterprise companies is that we're able to move super quickly. One of the things I love personally and that motivates me is like thriving through chaos. And when anyone hears the word startup, they hear chaos, and that's what gets me going. And I really am passionate about taking the accelerated view and moving quickly and working with people that are in like-minded views.
Very, very cool. And obviously, Canopy and Prime have a partnership together where we're able to offer a full stack lending as a service and embed that into different vertical SaaS platforms, which I definitely agree with everything that you just said. Moving on a little bit into how you are proactive in communicating with business borrowers. So one of the things that I really love about the servicing space, and when we talk about servicing, is it is the highest point of engagement in a loan's life cycle. So post origination, which is really transactional, right? You're approved at that moment, but all of the repayment schedules, the collections, the questions that a borrower may have happen in the servicing layer. And as a VP of operations, this is very much your day to day, where you are handling borrowers' needs and helping them be the best versions of themselves. And that's really Canopy's goal, is that we want to enable operators like yourself to be better that then ultimately creates a better experience for borrowers. And so Square has both consumers and businesses. And can you talk a little bit about the differences in what you need to do to proactively and successfully communicate with the business borrower?
Yeah, it's a great prompt, and it's something I think about frequently, and it's a big chunk of my job at Prime and was a big chunk of my job at Square. One of the biggest takeaways from working at Square was focused on critical and first principles thinking. We're always encouraged to put ourselves in the shoes of the customer, understand the problems at the basic level. And upon joining Prime, I now see customers with a much wider lens beyond just the Square data, for example. Our ideal customer is heavily integrated across many different platforms that carry out their day-to-day operations. And one of the core focuses of embedded lending is being able to partner with companies who already serve those customers' needs through, say, accounting platforms, vertical payment platforms, and intimately get familiar with the borrower in that regard. What I've seen work really well with recovery efforts all lies, as you mentioned, in proactive contact with the borrower. For example, if we're providing alternative payment schedules through, let's say, an automated self-serve fashion via a borrower-facing dashboard or the lovely Canopy interface that we work with today, we can potentially even drop something on the partner's interface to get engaged with the customer prior to their next payment. What doesn't scale, and what I've experienced firsthand, is just cold calling customers and assuming either they're going to pick up, which you'd be lucky to see, and if they were to pick up, that they're handing their debit card over the phone. One thing I'm super excited about at Prime is the ability to take data insights from our customers, or really just similar customers like them on any platform, and being able to register that ignition of change in behavior. And that we can see through the third party or even permission data. And we're able to use that information to predict or foresee a repayment that may or may not fail in the future. A use case that we may encounter is a customer from, let's say, a horizontal accounting platform may take a journal entry annotating a late or unpaid invoice. How can we use that insight and recognize that change in behavior to help inform the next payment that's coming up tomorrow? It's a lot of insights to be ingesting and put to use, and that's what we're here for.
I think what's really interesting is, like, if you take your dad for an example, who's running a small business, on the one hand, the working capital that small businesses need is critical to their future. On average, a small business may take out three different loan types. Let's say I'm running a restaurant. I may take out a loan to help with payroll. I may take out an invoice financing product that all of my inventory is still unsold and in the kitchen. And then maybe I need to also pay the rent that month. And so those are three different loans. And if I don't have that working capital, it becomes a problem. And what we've seen in our data is that most small businesses can't find a single source to get the capital and liquidity they need. And so they go to a lot of different places. They'll use Prime and maybe Stripe and maybe Square, but it's very, very fragmented. And so as a small business owner, I'm just trying to run my business. And so how do you think about reducing the anxiety of the complexity of, let's say if I'm running my restaurant, I don't know anything about finance, certainly not about AM schedules or min pays or different drawdowns or restructuring, things that the Prime and Canopy platform do. How do you help to reduce the barrier of knowledge there so that people can get the value and also take away the anxiety of their repayments?
Yeah, it's a great question. Financial literacy, especially for small business owners, is something that is, as you mentioned, fragmented, really hard to nail down the right answer. And I'm hopeful that with embedded lending, we can serve these businesses on a platform they trust. If they're working with their accounting platform, they're willing to trust that the accounting platform is able to store their data, give them insights, and hopefully provide them lending products. One really strong promoter of Prime and why we feel we're in the best seat to do this is we are able to see the holistic view of the borrower. How can we take insights from different aspects of their business and not just one single vertical to help meet them on those three different use cases, for example, and just make that friction point reduced. Make it such that they don't have to ask for a loan or get to the point where they're having a cash flow gap. Let's proactively share with them, hey, we see you have an upcoming repeat transaction that's about to occur. Why not pay now and we will fund that for you? There's different ways to navigate the scared or apprehensive view of the negative sides of lending. A lot of the times, or hopefully most of the time, lending, if anything, helps businesses grow. So they're moving away from debt as a negative and moving in towards an accelerator view.
Completely agree. I mean, I think that obviously lending in its worst is a never-ending debt cycle, and we don't work with those companies. It's not our mission and value. Lending at its best, to your point, really helps facilitate better life experiences. It's how you get through college. It's how you pay for your car, your home, and ultimately fund your business. One of the things that you touched on was a little bit about the risk management, and this goes back to some of the proactive communication. I had a mentor of mine that used to run credit and risk at Capital One, and he said to me that the credit side of the house is where the innovation lies. It's very much where you want to experiment and trial different things to be able to open up the box to accept more people. The risk side is the other point of that coin, which is really on defense, where you need to be careful that people aren't getting above their skis or taking out too much debt, ensuring that there's an appropriate amount of risk given the capital that is deployed. How do you think about the balance of approving people and then also servicing them with risk as business needs change, seasonality needs change? Maybe someone goes through a slight drought in their store and they're not just selling as much as they need to and therefore need to restructure or go to a deferred payment schedule. How do you think about helping people through that in the context of risk?
Risk is the creative department in my mind. These are places where traditional underwriting is no longer the powerhouse or the one size fits all solution. We have to meet the borrower where they are and understand aspects like seasonality or that there's an upcoming construction project coming up on their street, and being able to proactively see these, again, changes in behaviors and alert the customer that, hey, something might prevent borrowers from being able to repay or customers to come to your street because construction will prevent it. So how can we really address those needs prior to the small business owner coming to us is really where I'm focused on thinking, and really excited about being able to take communities, understand what's happening in them, and help really energize the community through understanding their data.
Makes total sense. Moving forward a little bit into go to market, I think both of us have a shared point of view that the future of lending is very much in vertical SaaS, particularly as it relates to SMB lending. Banks have really not done a great job of providing alternative data sources to uniquely identify the risk, to your point, to get creative and to start approving more businesses that don't have a long history. And so there's obviously a lot of startups in the KYB space. There's a lot of startups that Prime also works with, leveraging alternative data. And so I definitely see analyzing lending in each vertical, whether it be payroll, accounting, travel, restaurant space. All of these are individual e-commerce, have individual needs for lending products. And so when you think about the joint go-to-market motion from Prime and Canopy, and you're selling or talking to a business that isn't doing lending today. So let's take the e-commerce vertical, right? Maybe someone wants to offer payment terms at the point of sale or checkout. But that's not what they do today, right? They're a web-based, maybe drop ship or direct to business e-commerce platform. They don't understand risk. They don't understand lending. They don't understand debt warehouses. How do you think about bringing them on board where lending is a value add to their end users?
Well, in the same way, we don't necessarily require, say, an ice cream store to understand how to be the CFO. I don't necessarily anticipate that every vertical SaaS company should also be an expert in lending. And that's one of the reasons why both of us are here is to accelerate those companies to help serve their customers. By building and partnering with you, one thing that we were super excited about on the go-to-market side is being able to get access to this out of the box solution built for lending companies just like Prime. We can move faster, help serve these customers, and really listen to their needs. And that's the commonality here is we're now live with you, which has been a really exciting time. And one thing that we're consistently iterating with you and your team on are here are the product needs from our customers and their customers. How can you help us serve them? And that's constant feedback, constant communication. And we really couldn't be happier with our decision to go with Canopy and get excited to build and grow alongside one another.
Very much appreciate that, and the feelings are mutual. Cheers to being out in the wild together. One of the things that I get really excited about in a vertical lending space is that if you take one of our partners like Flexport in the global logistics space, their merchants and borrowers are asking very different questions than someone in the restaurant or travel space would be, even though the product construct might both be a merchant cash advance, right? So both companies could be using an MCA product, but their merchants and borrowers have a different need and a different utilization of that financing. How do you think about, from an operational side of the house, each of these verticals that you partner with and their workflows and the things that their borrowers need, and how do you get up to speed on the interaction that needs to take place, knowing that it's not one size fits all? It's kind of a blessing and a curse because you get to customize a lending experience for the vertical, but it's also not horizontally applicable across the board.
Yeah, the common horizontal piece there, though, is, as for your example, is an MCA or term loan that we're working on right now, is you give the money out, the hardest part is getting it back, right? And the getting it back piece is where you can get creative as well. And it goes back to meeting the borrower where they are. What platforms are they using to operate their business on? And how can you engage with them other than sending various emails, requesting repayment, going through spam emails and folders, and just maybe making it more accessible to these businesses and understanding that Flexport customers, maybe they're not logging into their dashboard every day versus a restaurant. They're going to check their daily activity. So engaging with the customer, getting close to their operation to help inform our decisions is part of the communication aspect that we hope to build with our partners, that we can help learn and really serve their customers that is helpful versus just dropping a lending product on top that just may not fit for their need.
Totally. And that is something that we are trialing out called intelligent servicing that actually adapts to the data and vertical needs so that you can get high context and transparency per vertical instead of having a one size fits all. But I do agree there is a pattern of similarity in the products that people use. Speaking of intelligent servicing, it wouldn't be a fireside chat in 2024 without bringing up AI. And Gen AI is obviously very much top of mind for many folks. And I see a lot of companies taking aspects of an operational workflow and then letting AI be the agent or co-pilot to support it. And in most cases, it is commoditized. And so again, I think where we jointly have a competitive advantage is the understanding of the actual vertical. how do you think about AI in different parts of the lending stack, using it for the loan application process, potentially using it for fraud, and then ultimately using it as a operational accelerant to help with your daily tasks?
Yeah, well, I'm sure you're well aware that traditional banks, underwriting, loan servicing, it's pretty archaic, can take months to even get access to a financial product from beginning to end, leaving the customer in a serious limbo or dire need, or in worst cases, shutting down. Fintechs in the past decade or so have been working towards identifying repeatable processes and streamlining them such that they're able to deliver, for example, on speed as a table stakes feature. Now, loan approval or underwriting can take less than 24 hours. You can have your money instantly, which somehow has become just an expectation for a small business owner. Now the question is, how do you go beyond that? If they have their money instantly, what's better? And what's better is really operationalizing the underwriting process through AI, ML, all the above, and really assessing what can be used beyond the traditional underwriting methods. Let's call it debt service coverage ratio, which is used as a traditional ratio within traditional banking. But now we're excited to go beyond that. We're not going to look back and say, actually, that didn't work. It's been working for many, many years. It's how do we use that and more data, more information to supercharge the decision making and not let it be the decision of a single person in a chair deciding they like the food of that restaurant or not. There are many, many, many types of factors that go into this decision making that can go well beyond the computable brain. And that's the exciting piece. We're trying to gather as many factors that correlates between businesses and business entities that we can focus on detecting. For example, you mentioned fraud rings, or being able to adjust our expectation for a certain geography. If we're starting to see income for consumers go up in that area, they might have more money to spend. The exciting piece is we're able to tie these entity resolutions to whether it's third-party data or even public data to get the comprehensive understanding. Lots to unpack, and that's why we're both in this space. We're excited to really expand the understanding of what the power of AI and ML can do. And hopefully we'll get there. There's a lot to come, and there's been a lot of advancements already.
It makes me think back to about a decade ago when I was at a previous company called Earnest. We were actually renting out our office space from Square on Market Street in San Francisco. And at that time, fintech was very much about the front end of making things have a better user experience, right? And I think about even a recent podcast that I heard with Brett Taylor talking about the evolution of websites to mobile applications and now AI are all kind of different variations of the same thing where you're trying to communicate information through technology. So first through websites, then through apps, now through AI. And 10 years ago, it was very much about having a great user experience. But an insight that Ernest had then that I think is more true now is how do you leverage data to make better decisions? I think 10 years ago, that put a lot of burden on the borrower, where the borrower had to do more. And that's not a great experience when you're having to upload information. Do you think that with the data that Prime has and being able to leverage anonymous sources to start creating more predictions, that B2B lending will be able to boil down to a single risk score the same way that FICO does for consumers?
I don't think it will get to one single score. It's a many, many different factors that the models will continue to evolve on. I do know that obviously consumer FICO score is extremely directional. It's been around for 50 plus years. It works very well. It's something we take into consideration, but is not the end all be all for us in small business lending. There are many companies out there, some of which we partner with, that are going down this path of aggregating the data and popping out a score, but you can't lend off of that score. It's not approved, more or less. So how do you take those insights, learn from your outcomes, and compare them to what the behaviors were in FICO results or small business borrowing? It is really the evolution here. And as you talk about small business scoring, it's pretty raw. There's almost like the equivalent of flat files, right? And we need to be able to build that muscle and hopefully even share that information across different lenders to be able to have a consistent and common way to represent risk management. And I do believe that's where Canopy also comes in, is how can you help us see the wider picture, get insights from other companies that you work with, seeing from their customers. Like, the power is in the numbers. And that's where I'm excited also to work together to just see where that can go. The more data we get, the better we learn, and hopefully the more money we can put in the hands of the right borrowers.
And I think this is a major distinction that we can start to end on, which is banks versus embedded lenders. Banks look at things more or less one time, very transactional. And with embedded lenders, having thought of this as, from first principles, we're able to iterate on this, where the initial decision may need to be adjusted, whether it's through seasonality or collecting more data. Something that we see a lot of is new lenders that are testing out credit policies. In the old world, they would have to wait for those credit policies to season. Using Canopy and Prime together, being able to fast forward through time and create more tooling for operators like your team to be able to understand the risk of what would happen 6 months, 12 months, 2 years down the line, will allow you to make credit adjustments faster so that you're able to reduce the risk to both yourself, to the people that we work with, and the borrower. So experimentation and iteration through all of this, I think, is a very, very big theme.
Yeah, definitely.
Cool. Well, a couple minutes left to wrap up. Any advice you'd like to share with any other operations leaders who may be in the process of launching or scaling a commercial finance product?
Yes, a lot to share there. I'll boil it
A
down
lot
to
of
a few.
scars, a lot of war stories, I'm sure. Yeah, that could be
Yeah.
another fireside chat.
Exactly. Operations in general is a function that I feel and I've experienced is often ignored or thought of last in the tech world when compared to product or engineering. Of course, I'm biased as an operator myself, but I believe operations folks are the strongest. They're closest to the problems. They have the breadth, they have the depth to articulate solutions that are really best suited to serve the business owners. And one thing I'm consistently passionate about is I like to think of operations as the counterpart to really seamless front end design. You can design a front end experience that tells a story of simplicity or excellence or really elegance, but without the operators behind the scenes ensuring continuity, you're going to fall short in meeting the customer's expectations. So, one recommendation to those listening that are strong operators: listen to your customer, advocate for them, find a broken process, and design a world where a business owner has one less task to do and really frees up time to work on other higher priority items, or even spend time with their family.
I love that. And I completely second that. Every operation leader that I've worked with, including yourself, has immense amounts of resilience and empathy as you are on the front lines and really the voice of the customer. And for the most part, people are not communicating back to their borrower with thank you. There is typically a fire or a problem that needs to be put out. And so really appreciate all that you do and your team does. And to all the other operation leaders out there, thank you. This has been an amazing, amazing chat. Appreciate the time, Lizzy, and excited to talk soon.